very quick weekly forecast session. We'll keep it in line with what we've been doing previously in regards to referring to areas of interest, supply and demand according to TVT strategy, and then we'll work it down to key levels and areas of imbalance and volume, etc. So initially what we want to try and do is obviously identify on the higher time frame, top-down level analysis, as we have always been doing, to kind of recognize exactly what the market is doing at this moment in time and where we are seeing that it intends to go. So when we look at the weekly time frame, we can see we've got historic levels that were present on the chart from way back when. This is 2018. We've got an inefficient wick that was left behind. The market came back to test in 2021. Did not take 50%, so there is still liquidity lying up there. Equal highs were left behind to target at a future date, and the market then reversed from that point and continued down. Now, even though we go over this every week, it's always good to remind ourselves and tell a story in regards to what we see in respect of price action being read and what the candlestick charts themselves are saying to us. So obviously we know we're in a bearish trend at the moment. We've had a good bounce after kissing a demand on the lower time frame, which we'll get down to. The market has rejected out of that, and we may now see a bullish reversal, possibly in the coming days, weeks, months, whatever it is. But when we get to that point, we know the analysis that we've undertaken in the area where the market rejected out of and why it's rejected out of that zone, and what we are now targeting to see whether it confirms the move that it has bounced and rejected from as a move for short-term retracement reversal, or targeting liquidity of supply, whatever you want to call it. But there is a reason that the market has been stopped out here, and it's now showing bullish bias and momentum for the week that has now just closed, that has pretty much taken the week prior. Even if those with a rejection wick, it has covered that previous week's bullish impulse and leg out down. So when we go down onto the daily chart, we can then see that the market has bounced off that demand, literally touching it, kissing it, as we say, and it has then kind of taken interim supply that was created, taken the bullish bias that was created, and now targeted the inefficient wick that was above. It didn't kind of close 50% at that point, came back end of the week, last day on Friday, has blown through the supply, covered the imbalance that was left behind, and rejected out of it. So again, we've got manipulation of highs and lows on the close of the week last week. So we have supply and demand sitting within the same candle, which we will now get down into. However, when we look at it on the daily chart, we can see that demand has been formed down the bottom here where it rejected from demand after touching it on the higher time frame. There was an inefficient wick left behind. We marked 50% of that to see whether the market would come back, take highs, test the wick, and then move high. So this is an area of interest for us. However, that has left behind areas of demand. They are on the lower time frame because obviously within the higher time frame of the daily we're looking at now, the demand has pretty much been closed by this initial candle that legged out, but there are levels of interest on the lower time frame below us. So we mark areas that have caused leg out, rejections, retracements that have not allowed the market to push back down as per what the bias was, and then reverse from that point. There are orders left behind here, which were absorption at the lows to then move the market in the opposite direction. So when we then go down onto the 4 hour, we will then have a look and see exactly what we see at this point. So we can now see why those areas of demand have been refined down and where the areas of supply above us lay. So here, from a few weeks ago, we have supply which is left behind equal highs, caused a leg out, took these lows here, and then continued to sell. So supply sitting up here, supply sitting up here. We had equal highs up here, which were liquidated on Thursday, and then the market rejected out, sold down on Friday, targeted demand on the lower time frame, and rejected back out of it. So again, pooling of liquidity both sides. Highs and lows are sitting here. We have supply that has been mitigated. The inefficiency has been tapped into, the imbalance I'm talking about here on the candlestick chart. So that has rejected out of that point. However, the market has tapped into demand, respected lower levels of demand, not sold down after tapping supply, taking liquidity of equal highs. Liquidity grab was ensured here on the lower time frame. However, it did not sell down, respected the demand that was sitting below. So we may well be looking at a bullish bias to start the week. So we will now then go down to that time frame and have a look and see what happens on the 1 hour. Okay, so 1 hour now, we are sitting in that consolidation. We can see the equal highs here that were liquidated with this move spiked up into supply. That was obviously the liquidity above these highs. 1, 2, all these equal highs along here. And they were liquidated, and you can see where the market liquidates into is this fair value gap that was left behind. You can see it closes it almost to the tick, exactly to close off that candle, and it sells out of that zone. However, when it sold down into demand. The demand here is on the lower time frame again. We have lower levels of demand marked out here. However, the wicks are covered nicely. So demand was formed here for a reversal, tapped down into this wick here, took 50%, rejected out of it, pooled liquidity, liquidated people both sides, then moved off, took all of these highs that were sitting up here, liquidated these highs, then pushed up again, liquidated those highs, tapped up into the fair value gap and rejected out of it for the remainder of the day. When we go down then onto the 15-minute, we can see again more of what has played out. So again, why was that demand marked? I hope it now becomes clear. From the 1 hour, it doesn't look relevant. We're thinking, why is that demand marked in the middle of a candle? However, when you go down to the 15-minute, we can see this is where the leg out was created to kind of push the market up higher. So effectively at this point, this candle liquidated these highs. Let's zoom into that so you guys can see this. So how is the market read on a fractal level and micromanaged? At this point, there was demand sitting below here, which then pushed up and took all of these equal highs along this level playing field here, right? The equal highs liquidated. This candle came, broke through those highs, came up, took out supply at this point, which was the bullish pressure to sell down, took out that supply. That was a continuation. We can see equal highs along here, 1, 2, and then into the fair value gap. This then continued the bullish move, continuation, interim supply taken, boom, straight through, all the way up, taking out this supply, taking out these levels of supply, taking out all of this liquidity up here where people try to sell down, and literally tapped into equal highs up here and took the inefficiency even above this point, which was respected previously, and liquidated right up to the top of this sell limit order that was activated to kind of push the market down, respected at this point, and continued down. So those who were swing trading this, they were told goodbye, liquidated at this point, pushed up again, pushed up into the fair value gap that we will be able to see on the lower time frame. So again, those highs were taken, and we actually tapped into this area of supply. Okay, so this is the supply that was left behind. Why is this supply? Because it kind of market was pushed up to liquidate highs before the market then sold to take all of this liquidity sitting down here that pushed up again, and all of this level of fair value gap imbalance down here. So that was all created out of this one push, and that is the push that the market came back to then liquidate at this point here, right? So that is where supply now sits. It sold out of this, came down and respected the demand that it created, bounced off that, and now we're looking for respect. So we want to see whether this supply gets held. That's our initial area of interest. We've got demand sitting below us that has held price up. We want to see whether that is respected. There's a whole bunch of liquidity lying down here. There's demand sitting below us at this point, which was tapped into, then created a reversal. And we have lower levels of demand below us. Okay, so what we'll do, we'll flip up to the 1 hour chart. We'll zoom out a little bit, and we will then put on our key levels and see exactly what happens when we overlay. Right, let's turn those on now. Okay, so we can see that our key levels, again, I'll tie up nicely with a lot of our areas of supply and demand. So we've got a beautiful 56.0 bullish imbalance here, which was a sell limit order being triggered right at the top of that wick. I mean, you can't get any more textbook than that. So right at the top where the market tapped into, there's a sell limit order triggered. That caused the market to sell down. We've got high volume introducing into the market here, which continued to push down into demand. We've got weekly POC sitting just below the demand, which is an interesting level because it seems as if the market may well come down to kind of target these levels of weekly POC, daily POC, 36.0 demand. We've got another weekly level down here, and we've got levels below us which have not been targeted as yet. So there is scope for the market to come down and target. However, if this weekly POC is targeted and mitigated, we have got daily POC and a bearish imbalance below, which could still get respected. Okay, so let's look to the upside. On the basis of this, with demand sits below us at this point, we've got our levels marked up. Above us, we have supply. We have an Asia POC which was not tested at all, as the market broke away and flew at one point in the middle of Asia, I believe it was. And then we've got a 76.0 bullish imbalance here, which was a selling order being triggered, which again were historical levels that we marked up in the middle of June. Middle of June and July, correct? So there's end of June, that's the beginning of July. These levels were held. They have not been tested as yet. So again, those are interesting areas of us for us to target for supply. So these are the levels that were kind of marked up at the moment. We're looking to see how the market develops. We're in a phase of consolidation, it seems. We don't want to kind of start looking at this on the higher time frame, but clearly the market is ranging. Okay, we haven't really broken highs. We've tapped into an area of liquidity. We've jetted out of it at this point, coming to demand, and now we are kind of consolidating. If market wanted to actually come in and sell down deeper, we would have most likely have seen an aggressive push through Friday into the supply and then selling down for the remainder of this week coming. However, that considering the market hasn't targeted supply at the moment and was rejected down, it seems likely that we're going to kind of sell down slightly before we then buy back up. So we'll see how that plays out. Again, the Discord will be active on this discussion on a daily basis. Trading days actively Tuesday, Wednesday, Thursday, but we are active on the charts every single day, even though we don't trade actively on our own personal live accounts on Monday and Friday. The guys are finding a lot of benefit within the Discord. There's a lot of information that is disclosed there. Nothing that is not in the course. As we said before, there has been nothing that has left out of the course content. So the intermediate and the advanced course that have been released for free, every single thing that you need to know for the strategy is actually in there. However, the understanding is more refined and explained in a lot more detail in the Discord. That is the only difference that the Discord has. There is no additional information that is released on the Discord. It's the interpretation, analysis, evaluation, and understanding of the information of the course that is additional to the course content on YouTube that we find in the Discord. So there's no new information that will be released. It's just the understanding and implementation that is refined through question and answer and daily review of the charts that we kind of take for only subscription membership members. That is the additional information that they have. There's no other information. There's no secrets that have been held back. Everything that we use and utilize have been released to you guys already. So those people that are asking what is special about the Discord, it is only that you get to spend time with us on the charts. You get to ask us questions. You get to see how we review the charts, read the footprint, explain what's happening at the time when the market is developing in terms of candlesticks, what happens when the market goes into the zone, how we then flip to and utilize the footprint chart to carry out our analysis and evaluation and assessment, to confirm our entries, and then we also make people aware of where our targets are once the entry has been confirmed. Again, it's practical implementation. There are no signals dropped on the Discord. There is no entry call or alert placed on the Discord. There are no SL or TP levels mentioned on the Discord, but a trade analysis and evaluation prior to execution and identifying of zones and levels on both the candlestick chart, the footprint chart, as well as price levels are mentioned, and the members are then left to their own understanding and interpretation to enter the trade and exit the trade according to their own risk parameters. But we also are on hand to evaluate the trades that they've taken in the day to see whether there's anything that they could do better, whether they could have read price action better, whether they could have used the tools that we have for institutional trading, such as the real volume and the footprint chart, in a better way, or understanding it in a more refined manner to better their execution of entry and tighter stop loss, or setting their TP at the right level if they've kind of broken even or lost on a trade by being too greedy about it. Okay, so I hope that's clear. Slightly longer video than normal, but I hope it's been beneficial to understand again a very quick top-down analysis without the detail that we went through for the members last week. This will go on to the public platform of YouTube. Everybody will be able to see this, and hopefully gives people a bit more information about what we are doing in the Discord and TVT 2.0. Okay, take care, guys. Trade safe as always. Like, comment, subscribe, share it with those who you think it will be beneficial for. Feel free to message us on Instagram and social media, YouTube comments, etc., and the like. And we usually are quite active on that throughout the week. Okay, take care. Bye bye.